Morning, everybody. It's the 3rd of February. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Good morning, gentlemen.
Morning,
Good
all.
morning.
You both all right?
Yeah,
All good, thanks.
beer's
How about
coming
you?
on, Joe.
Oh, it's just been so lazy. I'm going to cut it off today.
You got a bit of a headache after last night, Joe.
Oh, my God. What a shit show that was.
That was incredible.
Did you watch it?
No, unfortunately, I missed the best bit, which was the first half, wasn't it?
Oh, my God. Well, we battered them in the first half, and then man sent off, which was not ideal, and then just burned the house down after that.
Yeah.
And then woke up and saw Manchester United score this morning. I was like, oh my God, what a contrast.
Yeah. I mean, they had a player sent off in the first. They had a
2
new
minutes.
academy player, first 2 minutes, and then that was
first game.
I mean, it'll be a while before he gets another shot, I think.
Yeah, well. Okay, so I don't really want to spend any more time talking about that. Let's get straight on to talking about stocks and markets. So
Let's talk about GameStop, shall we?
Yeah, had a bit of
We've seen the chart today.
Yesterday. Well, get it up on your screen for us. But the frenzy appears to have abated. It looks like the video game chain GameStop has abruptly stopped rising. I think that we've seen an end to the short squeeze there. I've got to be honest. I think you can see one of the candles on the daily chart, that massive one. Let's get a daily one up for us, top left.
This one.
Yeah, I mean that candle where it made a new high. I just think that was the end of it.
Yeah, that was. Yeah, it didn't stay up there for long as well.
Hindsight.
Yeah.
No, I know, but I just looked at it at the time. That's a sort of candle that looks like a complete washout, doesn't it? That's making new highs. Whoever's long of that, short of that, spewed their load up at the top there, and then it's just absolutely dumped.
82%. That's the thing, isn't it? That goes back to this next big investment boom and Elliott wave and all of that stuff. It's like the minute the taxi driver, like we said the other day, starts talking about it, it's the time to get out.
So, there must be some serious losses going around. I mean, where it became such sort of a almost like a cult following, you had people buying in, so yeah, let's get behind it, and they just must have been absolutely wiped out.
Yeah, I mean, I've had a few mates call me in the last few days, sort of saying, what spread betting company or what trading platform should I use to open an account? And you just think, oh God,
it's brilliant,
everybody's jumping in, aren't they?
Classic.
It's a classic. One of the comments as well, if you were reading the Wall Street Bets on that day before the big candle, it was actually the day it jumped from 150. It was trading up $150. They were sort of saying, whoever's offering 420s, pull your order, because it would be someone who was long with them on Wall Street Bets. So there was arresting orders in there around about the 420 mark. And then a couple of days, obviously, Cameron sort of like talked about it, and a couple of days later, well, that day, I just said everyone was talking about $1,000, and I said, well, why are they talking about $1,000?
You would get there.
Yeah, but I said, why are they talking about $1,000? Because it's a big round number. And that's the only reason. There isn't any other reason why.
I do like that though. It got very near to 500, which is a big round number.
Well, exactly, yeah. But because there was them offers in at 420, 430, and there was people on Wall Street Bets that they were sort of thinking, right, that's the sort of like level, and it would have been the Wall Street Bets guys that would be had their offers in there without a shadow of a doubt. Someone who's long on the early doors. And I said to Cam, I said, I would say 450 is probably the top, and then you'll probably get a big retracement. And it's sort of like it's nearly nailed it, but you can't short it there. No. So it's only sort of, but it's again, we can look at it and say it's obvious in hindsight, but it is obvious. These are things happen, once in a blue moon, but there's blue moons a lot. Yeah. So and humans repeat themselves, so it's the same participants, it's humans participating in it.
It seemed to gain a hell of a lot of traction though, didn't it, that one? I mean, I don't know if there'll be others. I think people will wise up to it now after that, and I don't envisage there being.
I think they'll get burnt. A lot of people just get burnt and run away, won't they?
Yeah.
I think that'll be the case.
You know, they tried it,
which is a pity, because then they won't really know what it's like to do it properly.
Spend your life chasing the Holy Grail.
Yeah, they probably saved themselves some money, won't they?
And grey hair and time and weekends wasted. Yeah,
well, that's the thing. It's sort of like, it's like anything, you know. It's the get rich quick scheme that people, you know, people sort of see it and think, oh God, I could have made this. That's a really easy option. It'll take me a few days to make a little bit of money, but it's sort of like it's the world isn't like that. You don't sort of earn a load of money for doing nothing. So you know, the guys who got onto it early did their research, did their homework, worked out there's a huge short position, got in early, and then it's sort of like, then it fed it to the masses, and feeding it to the masses caused the reaction. So you know, there are some guys who did the hard work.
Yeah, you got to remember, if you lose 50%, you've got to make 100% to make it back, haven't you?
Yeah.
Yeah.
So I don't think they'll be making it back on that. And silver's another case. Obviously, we saw a decent push higher on that. That slammed into a massive resistance area and then failed.
Failed dramatically as well, isn't it? Nearly 12% from peak to where it's trading at the moment.
Yeah, which is a big old move for silver.
Is lumpy, isn't it?
On the rest of the sort of more traditional stocks, we had Amazon with results out yesterday. They smashed it, as you'd expect. Big news that overshadowed all of that, though, was that Jeff Bezos will be stepping down as CEO, and he will be taking a position up as chairman. He wants to focus more on his SpaceX.
Why not?
Is it SpaceX?
Not sure.
One of the is in space exploration or something. I don't know if he's.
Quite admire his wife, actually, or his ex-wife. She got a bundle of cash and she gave most of it away, didn't she?
Did she? I'm sure she's not. She's probably doing all right still.
She's got a few billion left, but she obviously was ready to get rid of it. She did chuck a fair bit about. So
yeah, I didn't see any of that, but yeah. On the vaccine front, so obviously the UK tried to, or have done this big interval in between the first and the second vaccine, which was coming under a bit of scrutiny, but latest tests from the University of Oxford have showed that it's got an 82% effectiveness with a 3-month gap between the two shots. In France, they're questioning about the AstraZeneca vaccine, saying that they doubt the effectiveness for the shots in older patients, so they're limiting it to people 65 and below, and that's following the lead in Germany. So all is not too straightforward on the vaccine front at the moment either, by the looks of things. So that's sort of main headlines. What's going on with the charts? What did you guys see? Obviously, you've got a dollar index up on the screen there.
It's a bit of a junction, I think. I mean, if you look at, which we will do in a sec, if you look at cable and euro dollar, you would think, well, it's just going to keep driving down. But there's sort of a few. So in other words, the dollar will drive up with euro dollar and cable driving down. But there's a few warning signs. There's two ways of looking at this. This is a daily chart.
And shoulders.
Sorry, yes.
I was
talking about that.
You might as well do this.
It's my favourite. It's my favourite formation. So, you know that. So I'm just waiting for you to say it.
Possible reverse head and shoulders, but we've hit this. But we've hit this 38.2% fib, and that is one of the fib levels of one of the first fib levels of a corrective wave. And the only reason why I'm sort of throwing a little bit of caution at it is just when we look at dollar Swiss. Now, we said before, again, looks like three waves, but we said before that normally the first corrective wave formation is up in 3, then a complex, up in 5, up in 3, then a complex 3, and then up in 5. And you can see this last rally up in dollar Swiss in 5 ways. But as Steve said, these sort of time frames, when you break them in, they do look like head and shoulders. So I think a level to watch is a retest of the breakout level, which is around about 90.88 today for potential longs. So if you're reflecting, get rid of that one. if you reflect that back onto euro dollar, and we have got a confluence zone to the downside, so it is more attractive to sell into rallies, I think, than to buy into dips. So down here, this would be an AB equals CD formation target, and it's all the way down at 1890. And if we go to this chart, which is the daily chart, we've got the 61.8% fib at 118.87, so within 2 ticks. So that's looking quite attractive. And I think even if you just get mild rallies today and keep an eye on that retest of the breakout level in the dollar index, then I think sort of anywhere around sort of 120.55 and then getting up maybe towards 120.80 is a potential good shorting opportunity when you think about a risk reward trade. We've obviously got this previous swing high here, and if you look over there, it's quite a congestion zone. So I think this looks like quite a good target for the first corrective wave to the downside. Now, cable is a strange one. It's starting to go a bit now. So we've got this wedge breakout. It's quite common for the wedge to be retested, but this move lower just doesn't look, at least at the moment, doesn't look very impulsive. We've got Euro CPI figures out later, which could be a catalyst for a bit of a downward move in the euro, and it might just push the dollar higher and drag all the rest of the dollar majors with it. But I would just prefer to see more of an impulse move to the downside. Otherwise, I think here we've got previous support. This is previous resistance. Got an alarm on there, and I said yesterday 137.44 is would break a count, and that's still the case this morning. So I just don't know whether or not we're going to get sort of more of a choppy correction higher to get to this level, to then form a head and shoulders, and then move lower. So it's bearish, but it's just bearish from where? Bearish from here or bearish from up here? I prefer up here, but might not get it. Dollar Swiss have already explained, but it's actually pushing through that fifth wave now. So again, looking at buying in dips, the trend is clearly still positive at the moment. Dolly Yen, we talked about a wedge yesterday, and it broke the wedge formation to the downside, and then it's been a false breakout, and it's starting to move higher. It's been driven by stocks, obviously, and it did make the flag formation target, which came in at 105.15. So really need to see, and going back down to shorter time frames, really need to see a break of the low just to get out of this sequence of higher highs and higher lows. You want to start seeing lower lows and lower highs, because at the moment it's just dips are just being bought into. Dollar CAD, that had quite a decent reversal yesterday. I don't know what's happening in oil.
Oil's gone bid, so it's got stronger. I can sort of talk about that, but yeah, it's positive oil.
Lovely. So that again, 3 waves up. It didn't reach the wedge target. It looks like it's in a channel now, so maybe 3 down. I think if you can get dips around about 127, it's already retested this, so I wouldn't play the retest again. But if you get a move down towards 127, again, reverse head and shoulders, as we all know, offer very good risk reward trade setups, because your stop is underneath the right shoulder and your projected measured move is a lot higher, which I won't bother doing right now because I waffle a lot. Aussie dollar, I haven't got a clue is the answer. I'm still looking at big picture. I think we've made 5 waves on the daily chart, trying to work out where the prime shorting opportunity is on this sort of intraday mess. I mean, it's all in 3 waves. It's all very, very choppy. Again, I'd look at selling into rallies, maybe at trendline resistance, but are we going to get that far? I don't know. You could do if we see that move lower in dollar CAD. And then euro sterling, I've got a nice little wedge on there, but these wedges don't seem to be holding at the moment. So potentially buying sort of dips, maybe a double bottom 87.96. Again, you get down to that level. As a technical setup, it offers quite decent risk reward with a stop below and the target level being up here at 89.20. Euro yen, last one but not least, that's been driven lower with the euro pushing lower. It's not anything to do with the yen, because obviously you're seeing the yen, Dolly Yen, still driving higher with stocks. But again, I think there's potentials for sort of topping formations. But when you look at this sort of chart, it's so messy, even on a weekly time frame, and I haven't really got much in the way of cipher patterns, etc., etc., etc. In fact, the only one I've got is up here, which is a long way away at 128.05. Euro Swiss, last one. It got a decent move lower from the cipher pattern that we talked about the other day, but again, you really need stocks to start collapsing for these risk off currency pairs to start moving lower. And you can see that even though we got that dip down, now it just looks like consolidation. Again, if you get back up towards 78.6%, which I would have thought is around about 108.25, then it's worth getting a short on, I would have thought, but with an eye on stocks and what stocks are up to. That's me.
Thank you, Ian. That leads nicely to Steve then with stocks. Just having a quick look myself over the last hour, it seems to be some reasonable looking reversal candles forming.
Yes,
Steve.
Joe, the reversal neighbour. Joe keeps looking for these reversals in stocks, and he will be right one day. But he is correct. This morning we are seeing sort of a little bit more of a reversal on the short-term charts. Remember the weekly chart we've talked about. Again, this looks slightly negative, although we've had a good start to the week, but we're seeing it turn. Positive momentum is slowing down. We're looking like could get a crossover on the weekly chart, especially if this downside momentum continues for the rest of the week. On the daily chart, we saw a nice recovery over the last 2 days, as we saw from last Friday's sell-off. But we're seeing what's called a shooting star candle at the moment on the daily chart. I don't think it will just end up like that by the end of the day, because we've still got a long way to go. But the 4-hour chart has got a shooting candle, and if that closes there at 10 o'clock, then that's pretty negative.
Right into the cloud as well. Look at that.
Yeah, right into the resistance of the cloud. So really nice looking reversal, and will have completely engulfed the previous 2 4 hours, or maybe even, if it continues, the previous one to that, and that could be a bearish outside candle which covers the last 3 timeframes. So on the hourly chart, we've got a nice bearish outside candle which is negative, and we've broken below the 65.28, which was the previous low over the morning or nighttime session. So yeah, good chance for a sell-off. Similar sort of formation and patterns in the DAX. Seen a nice reversal candle. We stalled again in front of the 1400 level. What was the high? 13,989. So 11 ticks short of that. But again, on the 4-hour chart, we've clipped the potential downward trending resistance line. We had 1 point here. Let's draw it properly. 2 points here, 3 points here, so that makes it a trend line, and we poked our head above it and got really a bloody nose by the looks of things, trading at 13,890, so it's 120 points or 110 points below the high of this morning's session. So negative again. CAC very, very similar. Reversal formation. 4-hour chart looks negative if we maintain these prices into 10 o'clock UK time this morning. US not so bad. We've still got a bearish outside candle on the Dow in the hourly chart, so that's negative. It's broken below the 3 o'clock. This is obviously ultra short term low. Ian sort of highlighting the potential for dollar strength. It sort of like makes me feel like there is a little bit more legs in these in this sell-off. Nasdaq even looking a little negative over the last couple of hours. So you know, when Nasdaq looks negative, then you have got to worry, because that's what a lot of this is, you know, fantastic rally has been built on, the technology stocks. Same across the board. Aussie 200 the same, Nikkei the same. China, a little bit of a different story there, because obviously they're doing so fantastically well. Well done, China. We'll move on to commodities. There's a couple of interesting things going on there. The first one I'll start with is oil. Ian mentioned dollar CAD. Now, oil has had a decent move up. We'll take the daily chart. We were in this real channel formation for, well, since, let's say, the 11th of Jan until the 1st of Feb, so about 3 weeks, and we broke higher yesterday. Now, one of the reasons it did break higher was the OPEC plus nations, who have initiated quite deep oil cuts, and also said that there'll be a decrease in demand this year, expected demand, but they still think there'll be a big difference between the oil available and the demand. So they're talking about the cuts being too deep, and we'll have a real shortage. So this is a reason for the price moving higher. Wouldn't surprise me. I think a lot of these nations obviously benefit from higher oil prices. So having this sort of like power to cut output, and then that will squeeze the price higher, and then we'll basically, they'll make more money. So you know, there's a bit of a playoff there. But yeah, that's moving higher. The crude oil, Brent, just lagging the crude oil slightly, but they're still moving higher. The interesting one for me, obviously, we get onto the guns ahead. I did okay in that yesterday, is selling gold. The 1830 level is the key level today, this morning. The 4-hour chart, we talked about this wedge candle, and this is the 1790 is the potential move on that, the measured move on that, but it's really, price is really struggling to really get back above this 4-hour cloud, and we've seen a shooting star and another bearish candle in the last 4 hours. So I think that we could see this flag formation, the bearish flag formation, which I've drawn. I've obviously ignored this overnight move. We talked about that yesterday, and that has a measured move target 1734. I think that's too low. I think really the levels below that, if we get 1830 breaking, I expect it to move to $1,800 and retest that leg lower. But also the measured move from a previous ABCD formation is around 1765, and for me that would feel like a time to start to build longs again.
That's lovely. Thank you, Steve.
Yeah.
Okay. Guns ahead.
Just one thing to say. Obviously, a stronger dollar would suit all of those scenarios.
Okay, and
so
that looks
pretty pointed out.
Compelling on the chart. Okay, guns ahead yesterday. As you mentioned, Steve, you did have a winning trade on gold. You were the only one that had a winner of 1.34R on the sessions. Ian and I were stopped out. Hopefully we can get back on it today. A bit of red on the screen over the last few sessions after a reasonable run. Steve, you're holding it together quite nicely. You are on a decent little run up higher, whereas Ian and I are just flatlining and grinding lower. So, Steve, your honour, have you got one ready for us, or do you want to hand it over to someone else?
No, I'm going to go gold again. I'm thinking that it's done a lot of work. We've just recently, so at 2 o'clock this morning, this is the hourly chart, we got back up to 1845 and failed, shooting star, another sell-off. So even in the great scheme of things, this again could be seen as another sort of bearish flag, which will have a measured move target of around about 1800. So I feel a little bit confident of this, and I don't like it when I feel confident, because normally you walk into something feeling confident, you get smack straight on the schnauzer. So, but I am going to go for this. I'm going to sell it at the current price, 1835 18.71. I'm going to have a stop at 18.45.71, which is above the 18.45 level, which we just tested. And I'm going to target a move to 18.05.71 because I like to keep all the numbers the same, so we get a nice round 3-to-1 risk reward on that trade. And I think if we break the 18.30, we've got a very good chance of getting there today.
Cool. Good luck with that.
Sounded confident, didn't it?
Yeah, I like it. I might get that myself. Ian, have you got a trade idea already?
I'm just going to go with the flow instead of picking tops and bottoms. Oi, oi.
Just got to drop off. I've got to do a video.
Okay, mate.
All right. Cheers, guys.
See you later.
All right.
Selling at 120.18 euro dollar, targeting that confluence area at 118.90. With a stop at 120.62 gives me 2.9R.
Okay. Superb. What was your stop on that? Sorry,
120.62.
Okay. Cracking. Right. I'm going to take a look at the CAC. So this is a 4-hour chart. I drew on head and shoulders last week. I think it was last week or week before. Broke down, went on to hit the measured move and actually overextend it, going to a 1.27 fib extension. We've seen a decent rally higher. It looks as though it's crashed back into this neckline again of this head and shoulders, and we've also got a 61.8% fib level from this high up here down to the recent low, and obviously, and most importantly, we've got this lovely reversal candle that's formed on the 4-hour chart. So we've gone up to make new highs over the last 4 hours, completely reversed that, and now trading below the low of the previous candle. So I'm going to get on that. I'm going to sell it now at 55.78. Stop loss at 56.72. Targeting a move back down towards these swing lows down here at 53.68. So looking for 3.84R on that today.
Like it.
And there's a similar case actually on FTSE and the German market, but I just fancied the CAC over those two today. So there's the three trades.
We're all in the same boat.
Yes, all looking for risk off. Ian, I know you've got the calendar up there. We've got Eurozone CPI at 10. We've got US ADP at 115. Then we've got US ISM non-manufacturing at 3. And then we've got oil inventories at 3:30. And obviously when you have the ADP, on a Wednesday, that is generally seen as a precursor to the non-farm payrolls, which comes out on Friday. Whether or not these data points have any real say on what's going on in the markets at the moment, I don't know. I think they're becoming less and less influential at the moment, but that may change. We'll have to wait and see.
Yeah, and Draghi's coming back, isn't he? Draghi.
Yeah, I saw that coming back into Italian government.
Italian government, yeah. I liked him.
Yeah.
And we've also got OPEC meeting today.
Okay, as well as inventories, so it could be a spicy day for oil if you've got any exposure there.
Indeed.
Anything else on that list that we need to be aware of?
No, a little bit overnight. Australian trade balance at 12:30, or just past midnight, I should say. And then a barrage of figures tomorrow for the UK.
Lovely. And then non-farm
Friday. And Australian retail sales, RBA minutes as well, overnight Thursday. It's quite a busy week for figures.
Yeah. Okay, cracking. On the earnings front, we've got eBay and PayPal today. They're the biggest names out of the US to keep an eye on. I think that's pretty much it from us. We'll be back tomorrow morning with another roundup of the markets.
Indeed. Good luck.
Have a good day.
Cheers, mate.
Bye.